Hello guys, welcome back. If you haven't joined our Discord channel, you have been missing a lot. We are talking about all sorts of interesting companies and stocks, and one of these is Rowe Price. It's a company that we have long been talking about, and I have made a video some time ago, sometime in the past. And it has been one of the stocks that we have been talking about significantly lately, and I wanted to make a video about it. And there's gonna be another interesting company after this video that I'm gonna be creating a separate video for. But for this one, we're gonna be examining again Rowe Price. It is an asset management company. In fact, I actually have a 401k with them, a very well known company. And we do want to see what they are doing after they have fallen down a lot. If you take a look at the 1 month chart here, you will see that it has been going down significantly. And if you take a look at the 1 year, even more, quite significantly, as you'll see here. And it's been down about 53% from its 1 year high of $224, in which case it may have been a little bit overpriced, maybe. But let's see what's happening right now. So, the P ratio of the company is sitting at 8.5 and price to free cash flow at 7.4. So both of these are very similar, which is a nice thing to see, and also very low, much lower than 20, of course, which is sort of like our baseline. And outstanding shares that are going down. I do want this company to keep buying back their outstanding shares here because they look to be getting cheaper and cheaper. And you will see that all of our marks here, all of our key metrics are in the green over here. So that's a great thing to see. Now, take a look at the total liabilities divided by free cash flow. This is 0.7. It means that the company has virtually no liabilities compared to the free cash flow that they made last year, which is great to see. They have practically no debt. 5-year revenue growth of 60%, so it has been growing. Net income growth has been growing as well. Free cash flow growth, tremendous growth over here. And 5-year total equity growth also growing very nicely. And if you take a look at the deep dive here, you will see a return on equity that is amazing, with the company having little debt, overall 34%, and a net income margin of 37.6 is absolutely amazing. Now the company's dividend yield over here is 7.1%. If you take a look at the dividends tab here, you will see that the company has been paying some dividends over here. Looks like the frequency is quarterly pretty much, but the effective dividend yield right now is 4.54. It has been affected, that's the dividend yield, that's the TTM last 12 months, because of this one, which was a special dividend over here. But right now, if you buy the stock, it's going to be 4.54. This way we have the dividends module here, which tells us exactly what is going on. As you'll see, this is the percentage of current dividends paid in relation to the current stock price today, that is. So, let's go back and actually examine the income statement here. From 4.7 billion in terms of revenue to 7.6, pretty good growth over here. The company has been growing their revenue pretty nicely. And if you take a look at the net income, almost doubling it, actually more than doubling it here, 1.5 to 3.083 over here in terms of net income. So more than doubling their net income. Great to see from the company. A balance sheet that has actually more equity, about double from what it used to be. Very healthy signs here from the company. And remember that they have been buying back shares too. So that's another extra good thing. Even though they are buying back shares, they are free cash flow, their total assets are actually increasing. So the net income from 1.5 to 3 billion here, you will see that the net cash provided by operating activities is 3.4, very close, very similar to the net income, which is generally speaking a good sign. And the net cash used for investing activities, 1 billion, about 1 billion here. For the most part, some acquisitions that the company made. Previous years was much less, but that's very normal. And financing activities, as you'll see here, the company has for the most part been paying some dividends and some repurchasing of common stock. Now, free cash flow from 43 million actually to 3.2 billion. Amazing growth here. And the company has had an amazing year back in 2018. And you can kind of see it here in detail, but right now they're doing 3.2 billion in terms of free cash flow, increasing their free cash flow very nicely. Now, this looks great, but is it cheap too? That's what we want to examine here. And this is where we're using our stock evaluation tool, which will tell us whether the company is cheap or not, if we actually compare it to the revenue that they are doing, the net income, and the free cash flow that they generate as well. And so the revenue growth of the company has been from 12 to 23 overall, but we're gonna go lower. We're gonna go 8, 10, and 12 12 is going to be our highest one. Net income margins about the same, very, very nice to see. Overall 36 to 40. That makes it much, much easier to predict what the company is going to do. 36, 38, and 40 is going to be what I'm going to be doing here. And free cash flow margin has been a little bit all over the place, but typically it tends to be a little bit lower than 100%, really. So I'm going to go a little bit lower here. I'm going to go 60, 70, and 80. And an annual return of 13% is what I'm aiming for. If we hit calculate, you'll see that even our low estimate is pretty far from our current price, meaning that our current price is actually much, much lower than even our low estimates of revenue for a revenue growth of 8%, which is very, very achievable from the company. In the last 5 years, it's only 1 year when they have done 4%, 4.5 here. And if I substitute this with, let's just say 2% in terms of revenue growth, we are still in the green based on the current price of the company. So this one looks to be very, very underpriced right now. And for me, this is a massive buy, and I would definitely be looking to add this one to my portfolio. A great company that is very, very underpriced right now, and it may be a significant opportunity. Again, this is one that we have been talking a lot about in our Discord channel. And in case you are not aware, it's basically a publicly owned investment manager. Very, very well known for its retirement plans. Again, it's one of the retirement plans that I have. And it's a very, very old company as well, 1986 in terms of its IPO date. And I think, yeah, that it is a very, very nice addition right now as the stock market prices keep falling. It may be a very, very nice one that could, I think, easily double in the next few years. I mean, at this current market slump, you will be noting all these companies going down, and this one may go down as well. But it may be an interesting case, an interesting entry point right now at near $100. I think it actually is, especially if it reaches 100, it may be even better. Typically speaking, when companies trade near whole numbers, like 100 here, they tend to approach them or at least go close to them. So you may, if you are interested in this one, you may wait a little bit till it falls to 100, which may happen. But then again, you could buy at 100, of course. This is, again, a company that is very, very undervalued based on what it is, and I could see myself buying at any point right now, really. But let me know what you think about this one. Leave a comment below, and if you are interested in learning more about these kinds of companies that we're discovering in our Discord channel, you can find the link in the description box below this video. We'd love to see you there. We are pretty much chatting every day. Very, very nice discussions. It's actually a lot of fun. So again, we'd like to see you there. And thank you for joining and actually watching this video. If you are not a subscriber, you haven't joined us already, remember that you can subscribe at any point. And please leave a like, that helps a lot. Thanks again for watching, and I'll see you in the next video. Be around, because the next one is also going to be an interesting company that it's definitely worth potentially buying. Thanks for watching again. I'll see you soon, guys. Bye-bye.